Hello everyone, George DeSantis here with the look at the market for the week ending April 29th, 2016. Well, let's start by looking, as we usually do, looking at the monthly chart of the S&P 500. On the monthly chart, not a lot has changed here. We'll be entering a new bar, the month of May, so we'll have a whole print that's new. This bar, in the month of April, hit the parabolic dot, so typically that signals a reversal of this downtrend that we've had here. We'll see how that materializes. In any case, at the middle of the chart, we see MACD continuing to trend up from below the zero line, and Alex Elder's force index is still above the zero line. So we might see a move here to an uptrend, given the multi-chart is now indicating a reversal on this parabolic stop and reverse. Let's take a look at the weekly chart. Now on the weekly chart of the S&P 500, we still have the Kalman filter above the instantaneous trend line, Kalman filter in yellow, instantaneous trend line in blue. So technically, from the point of view of the MESA indicator, John Ayler's work, we are in an uptrend. As far as parabolic is concerned, parabolic, the yellow dot here, is still below the most recent bar, last week's bar, this past week, and therefore there is no indication from this indicator to switch to a downtrend. Parabolic stop and reverse, it's called, and that means whenever this indicator, this dot is below the most recent bar, the market is still in an uptrend. Now we got caught between a resistance line here, which is this trend line that was drawn from a previous high over here to this high to this level here. And so we're caught now between this resistance line and this possible support line at 2046. We closed at, what do we close at? 2065, which is at this level here. However, we are still likely to see support at 2046. If we do, we can then consider this to be a consolidation period that we went through. That's if we are going to go higher, if we're going to break through this 2100 or so resistance level. So that, of course, we wait to determine. Notice last week we saw this shooting star, or what I call a finger, and that was an indication that we should expect some weakness this past week. Last weekend we saw this, and this past week, this is what we got, a bearish bar. In the middle of the chart, RSI 12 hit the 60% line and is now trending down a bit, but it's still above 50%, and as long as that's the case, I'm not ready to call this a change in the direction of the trend to a downtrend. It's still in an uptrend on the weekly chart. MACD is still above the zero line, although the histogram ticked down a bit, and percent R is still above the 80% line, indicating strong momentum, although percent R is really an indicator that there's an oscillator, and you can call this an overbought level. I use it as a momentum indicator. So at this chart, what we have is most of the indications are telling us that we are still in an uptrend, and there are signs of weakness, and the critical level here is 2046. If we can break up, if we can hold this resistance, this support rather, and break resistance above here at 2100, we have a nice run to make in this particular uptrend still. Let's take a look at the daily chart. So on the daily chart, we see weakness. What we see is that the parabolic has been hit by this most recent bar here a week ago, and now the parabolic is above Friday's bar. In addition to that, though, what we see is that this is a hammer, and we could be finding support here. That may be indication that we're finding support at the 2046 level, as we saw on the weekly chart. That, of course, we'll determine in the next week or two. But so you have this conflict. You have the 9 EMA above the 30 weighted moving average. which tells us the trend is still up, although it's showing us more weakness. We have the parabolic above the Friday's bar, but on the other hand, we have a hammer. So we might just see some support here at 2046. Now, in the middle of the chart, RSI 12 did cross below the 50% line, and that's definitely not a good sign for the bulls. That is weakness here. So, and below that, we have Larry Williams, pro-buying indicator, also below the zero line. So these three indicators here, including percent R, showing us some weakness as the market pulled back from this high, as the market pulled back. Let's take a look at another daily chart that we often look at. Here's that other daily chart of the S&P 500 we usually look at. And on this chart, we have the Kalman filter and the instantaneous trend line. Now we see that the Kalman filter did cross below the instantaneous trend line. And as we saw on the 930 chart, the parabolic is now above this bar, Friday's bar. Well, perhaps this 2046 line will hold as support. If not, we are going further down, probably around 2000 will be the next support level, and we would wait to see how that develops. Now, Jerry Appel's sum of the rate of change indicator did cross below the 4% line, so there is weakness here, and there's a sell signal here. Okay, if we use Jerry Appel's sum of the rate of change indicator. Now, last week I pointed out that there was this bearish divergence of MACD, and that was of concern. And we saw that, well, last weekend we pointed that out, and we saw what happened last week. We got a pullback. Percent R we saw on the other chart is showing that weakness. It's crossed below the 50% line. So there is weakness here on the daily chart, and the big question is, do we find support at 2046? If not, we can look forward to another drive down to about 2000, and that would be problematic for those of us who own some stocks still. Let's take a look at another chart. Here is the daily chart of the S&P 500 on which I calculated these pullbacks here. This 28 point and 55 points, etc. The average was about 40. Well, that was before I calculated this one at 47 points. So from this high to this low, it's 47 points. What's problematic here is the fact that we can argue that we are now making lower highs and lower lows. I drew in, if we consider this to be a head and shoulder pattern, this head, this left shoulder, and this right shoulder, I drew the shoulder line and calculated the distance between this point and the middle of the shoulder here, just below the head, and projected the target based on that measured move, and the target comes out at 2033. So right now we are looking at a further pullback if the head and shoulder pattern, if this is a head or shoulder pattern that gets played out. The usual target is the distance from the head to the middle here, to just below the head, and this is where we end up, 2033. So we'll see how that plays out, but we can expect perhaps a pullback to 2033 before we have any chance of a further run up here in the bull market. So what is concerning here is that head and shoulder pattern, and the fact that we're making lower lows and lower highs in the last number of days now. So let's take a look at another chart. And here is the regression channel chart from software by Best Choice. We can see that for the last 3 or 4 months we've been a pretty narrow channel. However, right now we're at the bottom of the channel. In fact, we're below 10%, and we had that experience here in February. It doesn't mean it's going to happen that we find a bottom here, but this market could be rolling over a lot more, as some gurus are suggesting. One of them is suggesting a 76% rollover. So we'll see how that turns out. But in any case, according to this chart, the regression channel, we are now at the bottom oversold level on the regression channel. Perhaps we'll see a up move from here, and we can only hope. And here are the charts from stockcharts.com. We first look at the weekly chart. We can see that we still have an uptrend here, the 9 EMA above the 30 weighted moving average, and that's our green line over the red line. And we have a blue bar again. We had a blue bar here, changed to green. We have a blue bar here, and now we wait to see what direction we'll go in. Now on the daily chart, we'll see that we do have some. We'll see that weakness that I've been talking about for the last few minutes. But this weekly chart still shows us that the MACD is bullish above the zero line, and volume has picked up a bit. We do have a spike down here on the weekly chart, which might turn out to be a buy signal. But with all of the resistance that the daily chart is showing, and we should take a look at that now, it's doubtful whether we should do any buying here, perhaps holding. But look at the daily chart. The daily chart, we saw this bullish divergence on a daily chart. They're not as pronounced or as significant as bearish divergences rather. This is a bearish divergence, I'm sorry. But they're not as significant on daily charts as they are on weekly charts. However, we can see that the market did pull back here. We saw on the previous charts we looked at. And now the most recent bar is closing just above the 30 WMA. So there is weakness. We can see further pullback here. And this is the daily chart that we're looking at. So on the weekly chart, summary, on the weekly chart and on the monthly chart, there are signs that this trend is still intact. It's uptrend. The daily chart is showing us some real significant weakness. And it is to be determined whether or not the 2046 level is going to hold us support on the S&P, or whether we'll break through the 2100 level in the coming weeks and head for higher highs. The bet right now by most people that I listen to and I hear is that this market is going to go through a further correction. How big a correction is anybody's guess. However, if I own some stocks still, and I use a 6% rule. If they drop more than 6%, I'm out. But you have to develop your own sell signals and determine if and when you would decide to sell anything that you own. Use a sleep rule. I use a sleep rule. If I can't sleep at night because I'm worried about it, then I can get rid of it. Could always buy them back. Have a nice weekend, and we'll talk to you next week. Bye.